The perfect storm is gathering, and most people don't see it coming. What if I told you the UK housing market is sliding into a moment of truth, a rare, explosive collision of forces that could rewrite fortunes forever? Imagine looking back 2 years from now and realizing you could have predicted it, that you could have acted ahead of everyone else, but instead you did nothing. That feeling, the fear of looking back and knowing you missed out, is real, and today you're going to learn exactly what's coming. Because this is more than a simple housing slowdown, this is a tipping point. You're about to see data that shakes the foundations of UK property myths, exposes the cracks in the facade, and reveals a hidden map of who will win and who will lose when this storm hits. Because when this storm lands, it will hit hard. It will hurt those who trusted headlines, but it will reward those who read the signs. It begins with a simple truth. In 2025, the average home in the UK sits around £269,000. But the surface doesn't tell the real story. Underneath, the terrain is shifting. Rewind to 2024 and early 2025, and we saw a strange plateau. Price growth stalled. Some regions dipped. London and much of the southeast hit a wall. Buyers pulled back. Sellers froze. Meanwhile, parts of the North, Midlands, Wales, Scotland, and Northern Ireland quietly rebounded, with annual growth above 5%. Two seismic forces were forming the early winds of this storm: mortgage rate fatigue and supply stress. Mortgage rates spiked in 2022-2023, crushing affordability and freezing demand. But late 2025 brought a subtle reversal: lenders cutting deals, fixed mortgages dropping toward the mid-4% range, and early signs of rate easing. Normally, falling rates spark demand instantly, but not this time, because people don't trust the market yet, and that hesitation is creating a dangerous buildup of pressure. Then there's supply, or the lack of it. Every year, Britain builds fewer homes than required. Planning is slow, developers are cautious, labor shortages and high material costs linger. So supply is tightening at the exact same moment demand is quietly strengthening behind the scenes. That mismatch is the core ingredient of volatility. But here's the twist. The storm isn't forming from one big shock. It's forming because multiple forces, mortgage shifts, regional divergence, affordability ceilings, policy uncertainty, and consumer psychology are all colliding at once. And here's where danger enters the picture. The people who bought at the peak, especially in the South, are the most exposed. Picture someone who bought a £500,000 home in a commuter town at the height of the frenzy. They stretched, thinking rates would fall quickly. Instead, rates stayed high longer, wages stalled, and their area became one of the most overextended in the country. Their property value may appear stable on paper, but real equity is quietly eroding. Their home is stuck in a value-flat, costs-up trap. Meanwhile, investors who bought more affordable homes in Manchester, Leeds, Glasgow, or Cardiff are seeing slow, steady gains, real gains backed by affordability and demand. This divergence is the fracture line spreading through the UK, a fracture most people can't see yet, but those watching the right indicators already feel the tremors. And while many fear a crash, that may be the wrong bet entirely. What's coming next isn't a collapse, and it isn't a boom. It's a revaluation shock, a widening gap between winners and losers, between overpriced and undervalued markets, between the patient and the panicked. A chasm is opening. Some areas are set for multi-year stagnation. Others are positioned for steady, resilient, compounding growth. Now, imagine this from the perspective of buyer psychology, an invisible force that dominates the UK housing market. Right now, buyers fall into three emotional groups. First are the frozen. They want to buy, but they're paralyzed. They're waiting for rates to drop a little more, prices to fall a little more, and the perfect moment to appear. But hesitation is a tax paid in lost opportunity. Then come the fear-driven. They read every doom prediction online, convinced a 20% crash is guaranteed. They forget that UK housing rarely moves like that, because supply shortages and urban demand create natural flaws. And finally, the insiders. These are the quiet movers, the strategic buyers, the investors analyzing micro markets, not headlines. They're buying when sentiment is low. They're securing deals while others argue on social media. They understand that uncertainty is the disguise opportunity wears. Meanwhile, pressure points are becoming clearer. The South, especially London's commuter belt, faces the biggest vulnerability. Years of rapid growth pushed these regions to their affordability limits. When rates rose, these areas froze instantly. Prices didn't collapse, they stalled. But a frozen market can be more dangerous than a falling one, because the risk grows silently. If rate cuts are slower than expected, or job markets soften, we'll see pockets of forced selling. Not a wave, just enough to shave a few percentage points off local prices. The South isn't crashing, but the era of automatic gains is finished.
Shift your attention north and the story flips. Cities like Leeds, Sheffield, Liverpool, Nottingham, Belfast and Glasgow are quietly becoming the backbone of market resilience. Why? Because affordability is oxygen. These areas haven't hit their ceiling. They're benefiting from internal migration, remote work shifts, and regeneration money. Investors priced out of the South are moving north. Young families are moving north. Businesses are expanding north. The North isn't a bubble, it's a reset. But this brings us to the heart of the storm, the convergence of three major forces. First, mortgage rates are easing just enough to awaken demand. Even a small rate reduction can unlock thousands of hesitant buyers. Second, supply remains critically short. Britain simply cannot build its way out of this gap fast enough. Third, regional markets are no longer moving together. The UK has split into dozens of micro-markets, each with its own trajectory. Some will quietly outperform for a decade. Others will stagnate. Now picture this contrast. A young couple in London waiting for a crash that never comes, losing year after year to indecision. Meanwhile, a family in Nottingham or Leeds buys now, benefits from rising demand, lower competition, and regeneration-backed growth. One waits for clarity, the other moves during uncertainty. And the ones who win in property are almost always the ones who move before clarity arrives. So what does a smart investor or a smart buyer do in a storm like this? They stop thinking nationally. They focus instead on micro-markets, specific postcodes, transport links, job centers, regeneration projects, rental demand pockets. They understand affordability cycles. When monthly payments drop, buyer numbers surge. And above all, they think long-term. Property is not a game of 12-month predictions. It's a game of decades. And the people who look beyond the noise, who position themselves while others hesitate, are the ones who win.
Right now, opportunity lives in areas undergoing transformation. Transport upgrades, university expansions, new business zones. Opportunity lives where rental demand outstrips supply, where yields still make sense, where middle-income families can genuinely afford to buy, driving stable upward pressure. But the truth is deeper than that. The greatest opportunity lies in the moment when sentiment is uncertain. Because uncertainty scares most people away, but it hands the prepared their biggest advantage. The perfect storm isn't something to fear, it's something to understand. Markets don't reward the loudest opinions, they reward the quietest preparation. And late 2025 is a rare moment where fear, hesitation, and confusion are masking one of the cleanest setups in years. Because storms don't just destroy, they reveal. They expose weak markets, weak investors, weak assumptions, and highlight the strong ones. They clear the noise and expose the truth. The UK housing market isn't collapsing, it's reorganizing, redistributing, resetting for a new cycle. And that leaves one question: what role will you play in that cycle? Will you stand on the sidelines, paralyzed by headlines? Or will you read the signals most people are ignoring and position yourself where the wind is shifting? You now understand the psychology, the data, the fracture lines, and the opportunity zones. You're ahead of the curve, ahead of the sentiment, ahead of the fear. And when the housing market resets, it won't reward those who waited for certainty. It will reward those who understood the storm and acted accordingly. Because the storm is coming, but now you're ready.